Hey everybody, welcome to Trading Capital's exclusive analysis. In this video, we're going to be discussing gold, primarily gold, and we're going to look at the GDX miners to kind of give us some insights as to what is going to happen with this major asset and commodity. It's been in a raging bull market, and everyone wants to know, should we be buying more or should we be taking profits and waiting for a dip? So far, gold hasn't really given us that much of a dip. This was your last major dip into your 50-day moving average, which was around May. But gold has had an extraordinary run to the upside, and I do think that there is a little bit of caution around buying this potential asset here. I still like gold over the long term. Don't get me wrong, I'm a buyer of physical. But that being said, as a trading asset in this upper range, I think the upside is certainly limited. And we're going to be discussing a few interesting things here. A correlation gold to copper. We're going to be looking at the GDX to gold. We're going to be looking at some of long-term picture symmetrical moves. So there's lots to dissect in this video. I would definitely stay tuned for the whole thing. So gold daily chart right now, recapturing all of the key daily chart moving averages on Friday's close with the epic fall in interest rates. You had gold surging up 0.98%. You can see gold is just chopping inside of a wedge pattern. The weekly chart area that gold is now being defended on multiple attempts is your blue moving average. This is your weekly 20 moving average. You got defended here in July. You got defended here in August. It does look like gold potentially wants to make another run for a new all-time high. Maybe it's going to hit that psychological 3,500 number, sweep out some of the shorts because there's certainly a lot of people that are shorting gold in this region. And I think that it is a smart bet to accumulate a bit of a short play, but it does look like we're going to make one more potential all-time high sweep before I think the bigger down leg starts in gold. Now, when I look at this chart pattern, it's really important to look at gold on a longer term basis. We're going to go to the monthly chart right away and dissect things. Let me just turn off some of these key moving averages and we'll just look at a clean chart using trend lines and previous price history. So gold has clearly had an amazing run. You can arguably say this was your bull market bullish engulfing reversal in October. And since the high pivot there, the all-time high pivot in gold, gold is around 93% to the upside, about $1,684 on the spot price. Pretty impressive price action to say the least. Now, the question is, when we throw on this RSI, let me just minimize the bottom and open up this RSI on the monthly chart. You can see how extended we are in the monthly chart. Now, I'm not saying the RSI is a God-given signal that is an all flat out short. RSI is tricky to use. You need to know how to use it in conjunction with other long-term signals. But nevertheless, we are super extended on the monthly chart for gold. And when we just simply look at where we traded on previous RSI monthly pivots, look at this previous monthly pivot over here. We were extended for quite a long time. And then what did gold do? Gold had a pullback of about 20%. We move along. Extended here in 2011 off of this pivot. Monthly RSI a little overbought. What happened to gold? Gold had about a 20% decline. Then we look back here in 2008. Gold was extended on the RSI. What happened? Gold ended up having a monthly pullback of roughly 34 to 35%. Then we look at this similar structure in 2000, early 2000, 2006. What happened to gold? Gold had a pullback of about 20 to 26%. So when gold hits this monthly overbought RSI, and it's done it numerous times over history, we're talking about long-term signals, not day-to-day or week-to-week. This is monthly signals. Overbought RSI on the monthly chart. What did gold had? Gold had about a 49% decline. Similar back here in your early 70s period. Gold had almost this double top monthly overbought RSI, and this is what's the most similar in structure. So you had your initial run up, gold was slightly overbought, got a small consolidation pullback, sideways chop here, and then gold ended up printing. And then you got overbought yet again, and what happened? Gold ended up going through a little bit of a decline, call it about a 30% monthly decline. Now you can see that even with the double top RSI, that initial pullback of roughly 30%, gold still surged and made new highs. So you're looking for those negative divergences on the larger time frame to give you a more definitive longer term sell signal. This is why gold is likely going to keep trending higher, because it hasn't given us, if we look at this recent structure in gold, gold's given us kind of this double top monthly RSI overbought structure, but it hasn't given us any sort of a negative divergence like we saw in the 70s here. So what I'm looking for in probably the next, say, 3 to 6 months, I'm looking for a decline in gold, call it 15 to 30%. But once we get that decline, I think we could easily push even higher, kind of like we did in this 1970 cycle. This is what, in my opinion, we're shaping up for, is a very similar structure in price action in gold based off of some RSI divergences. Now, let's move along to the GDX, gold miners, because gold miners' free cash flow and profit and revenue are certainly surging to the upside. But when we look at the monthly chart, look where GDX is trading, sweeping that September 2011 all-time high pivot. This has had a major extension move to the upside, and it's also getting very overbought on that monthly time frame for the GDX. One thing that's for certain for GDX is you are running into some longer term resistance. This is a trend line that goes to pivot high in 2024, pivot high in 2025. Now, we don't just have that trend line. If we actually go to a monthly chart on your GDX chart, okay? And there's a couple things that I want to show you here with GDX. First, we're starting with trend lines, and then we'll look at some measured moves. Look at this monthly chart trend line that GDX is tagging. This is a pivot, goes back to 2016, goes to your 2020 high, and we're tagging that area right at a previous double top all-time high sweep in a very extended state. Now, since we have certainly defined some key trendline resistance, obviously trend lines are not a guarantee. We want to swing the probabilities in favor of what is likely going to happen. So again, I'm going to go to this, let's go to the monthly time frame. So if we look at what has transpired here in the GDX, if we take this measured move here to this high, it was roughly a 45-point move, 337%. If we take this high to this move, you can see we're still a little bit shy away from that 45%, so perhaps there's a little bit more room to run, okay, on this larger time monthly measured move, okay? So if we were to complete that measured symmetrical move of roughly what happened here in the 2008 period to 2011, and again, you get some vicious pullbacks inside this overall uptrend. But if this move was to play out in similar force and similar nature, we're looking at an upside around $66. However, one thing I want to bring to your attention, okay? A more recent move, if we simply take this COVID low and we identify the symmetrical move that happened here, this was a $27.88 move, 185% move to the upside, and we pull it forward. Look what this type of a move is. Almost to the T, the exact same measured move in dollar value. So just understand, we're hitting symmetrical moves. We're overbought on large time frames on gold. We're hitting massive resistance on these trend lines. Gold is certainly into an interesting area that I personally am not looking for a swing trade long up here. I'm more inclined to short it. I'm not shorting gold specifically yet, but there will come a level. If gold starts to pierce this all-time high, then I'm going to look for a swing short on the actual gold price. Now, one other metric I want to show you is a bit of a gold to copper price history. So, looking at the long-term price of gold and copper. Copper's down here in red, gold is obviously up here. Let me just clear off all of these previous little price history zones. So what I'm observing here in copper and gold, and it's not a typical correlation that you see, but gold and copper do typically move in tandem together. Very often copper will actually front run gold and lead it to the upside. And there's a specific time period that I want to bring to your attention right back here in your 2010, 2011 period. So if we zoom in on this period here, copper actually made this beautiful double top. So really it hit its first initial high in February of 2011, had a little bit of a dip, then it popped up to this double top in July of 2011. Gold still was trending for a couple more months until it ended up having some flagways, lower distribution patterns, and then an inevitable decline. So what I'm saying is copper will sometimes top a couple months before gold does. So what that brings me to my next thing. If copper sometimes tops before gold, what is copper doing right now? Copper's potentially putting in a massive monthly reversal topping. This obviously came on the back of news and Trump, but nevertheless, this is potentially putting in a bit of a topping formation. And if copper typically tops 1 to 2 to 3 months before gold, that could be giving us a little bit of an insight that maybe the upside in the near term for gold is somewhat limited.